The week ahead. Last week was a very unusual week. What showed on the indexes was very dissimilar to what showed in most accounts. The market was driven by a few big tech stocks. On Wednesday, they reported it was the biggest differential since 1965 between what the indexes were showing and what was really showing in portfolios. And the portfolios and in the losses were losses. And of course, the indexes were up very strongly. We had the two major events. We had the FOMC meeting, and then we had multiple earnings from the large tech firms. This week is likely to be substantially different because you don't have all that excitement. What is important this week, I believe, is to watch the indexes. So for example, if you look at the monthly bar is unlikely to change. It would take a very sharp break for the monthly bar to change this week. Possible, but unlikely. If you go to the weekly bar, you will see a quite different story. The weekly bar is right at the gap. If you close that gap and you get into last week, then you have a change in, at least in the short-term market, for what is occurring on the weekly bar. It's a potential change. It's not confirmed, but it is a potential change on there. The weekly bar has been one time framing higher for the past 3 weeks. So the first thing you would look for, do you have change in the weekly bar? Next, let's go to the daily bar. The daily bar is really what I will be focusing on more than anything else. You have two gaps. Friday attempted to fill the gap of upper gap. It didn't quite make it. What you have from Thursday and Friday, you have two overlapping days. If there is to be the potential for change, the first thing the market will do, it will trade below the 2-day balance and fill that first gap. If the change becomes more significant, it will fill the second gap. So I think this is really what you need to focus on next week. I think there's a pretty good chance that what the market did last week and all the excitement with the FOMC meeting along with the earnings, I wouldn't be a bit surprised if the market doesn't take a little breath in here. And that could mean the market could settle down a little bit and then maybe make another run later in the year. Why would I say settle down and then possibly make another run later in the year? I'll point out that the all-time high has still been made during the over-the-counter market. Additionally, the day following that all-time high, there was no meaningful excess on the daily bar. This is an important week. Follow the indexes. Take a look at we're going to take a fast look at the daily bar. And you can see the daily bar has been one time framing lower. So when we talk about change, again, an element of change, you would see continuation of one time framing lower on the daily bar. You would see the upper gap filled. If any change or any correction becomes more significant, it would fill the second gap. So that's what you really look at next week, starting with the profiles. You look to see if you get a cessation of one time framing lower or just one time framing lower continue. Have a great trading week. Thank you.